Greetings. This is Ramon, and
William.
we are both in the mortgage and real estate industry. And today we are going to talk to you about some of the biggest issues that we are seeing. I have been in the real estate industry over 20 years, where I have serviced the Charlotte Metro and Piedmont Triad areas, and I have sold and managed thousands of properties. William, tell us a little bit about yourself.
So my name is William Hughes, and I work for Mid America Mortgage. My NMLS number is 173755. I'm a licensed mortgage loan officer. I'm licensed in 7 states, including North Carolina, South Carolina, Florida, Georgia, Maryland, Virginia, and Texas. And I've been in the mortgage industry for over 20 years. I'm also an investor in real estate, so I own properties for rent. And this is something that I enjoy doing, helping people get financing for refinancing and purchasing homes.
I forgot to mention that I am licensed in North Carolina and South Carolina as well. We have sold properties in over 30 cities. Let's get started. Here are some of the biggest issues that we're seeing in the mortgage industry coming from William.
So I'm seeing a few different issues, and a lot of them I think are related to the inflationary pressures that the economy has been dealing with over the last couple of years. One of the big issues that I'm seeing is credit issues. And what I mean by credit issues, I'm seeing a high utilization of credit. That just means that I'm seeing credit cards that are maxed out, or I'm also seeing high um, payments on things like vehicles, car loans, having high payments. And what all that means for you when you're trying to buy a home is that, one, if you're maxing your credit cards out, your credit scores are going to take a significant hit. It's going to drive your credit scores down. Two, if you have high payments for things like multiple cars or even one car, then that's going to limit the amount that you have left over from your income, monthly income, that you can utilize to purchase a home loan. And so when we're looking at whether or not you should be approved for a home loan, should I say me and the underwriters looking as to whether or not you should be approved, we're looking at things like that. Can you afford to make this payment with the car loan that you currently have? What other debt that you have? And so your credit is a direct indication on how you manage your obligations, your financial obligations. So if you have a low credit score, it tells a lender that you don't handle your financial obligations so well. And so oftentimes I'm here to help and coach my clients to get their credit scores up and show them how to use their credit more wisely. Another thing that we're seeing in the mortgage industry, because rates have been elevated for the last couple of years now, is affordability issues. So what you used to be able to buy, now you might not be able to afford to buy anymore because it costs so much more from an interest rate standpoint and from a sales price standpoint. So one of the things that we've been able to utilize is common sense underwriting in our FHA mortgage loan program, which allows us to get you qualified for more with the same income that you have. Now, what that really means is it's not a magic trick or anything like that, but our common sense underwriting looks at things like your credit history, how you're paying your bills over the course of time, and whether or not this makes sense to do. So that's one thing that we're looking at here and seeing a lot of. The other thing that we're seeing, which also is probably a direct relationship to or effect of the inflationary pressures, is a lack of savings. Coming out of COVID, a lot of people don't have the same amount of savings that they used to. And so what that means is that when it comes to making a down payment and also closing costs, okay, when you're closing on a house or buying a new home, you have your down payment and closing costs. A lot of people don't have the money to make that down payment and closing costs. They don't have enough money to get the deal done. What we solve for that is with our down payment assistance program. What we're able to do is provide you with a 4% down payment assistance. It's in the form of a second loan.
How does that work?
Well, what that does is basically, if you have a sales price, let's say for instance of $300,000, we'll provide an assistance, so a second mortgage at 4% of that $300,000, which is $12,000, that down payment assistance. And what that does is it allows you to use that for your closing costs and or down payment. Okay. Now that's something you have to pay back, and we have it paid back on a fixed amortization. So it's something that's typically, it may be a small amount of money, maybe $50, $70, $100 or something like that. So it's usually not something that's going to be earth-shattering as it relates to your monthly payment,
Okay.
but it's going to help you in a place where you needed help. And it's not for everybody. Everybody doesn't need it, but some people do. That's something that we're seeing a lot of people challenged with, is having assets to close on the purchase of a home.
Okay.
So those are some of the biggest things that we're seeing, and I have seen over the last year and a half, and have been able to help people get resolved. So I would say your credit, I would say the affordability, and I would say the savings from an asset standpoint.
Okay. Those are some of the same issues that we're seeing in the real estate industry, right?
I mean, they're big issues, but you know what is when you're working with someone that's dedicated to help you resolve those things.
Yes.
Because some of those things can be fixed through education. Some of it can be fixed with just us changing the way that you do things.
Yes.
Right. And what we do here is spend the time to make sure that people know what they need to do to get what they want.
Correct. And that's what we're here for. We're here to educate you guys. Anything you want to know, real estate or mortgage related, feel free to drop a comment, subscribe to the channel, give us a call. We're here day and night. If you can reach us by email, text, or by phone. And like I said, if you want to just drop a comment on the page, we will double back and answer that for you on the page for everybody to see it. We want everybody to be able to receive the information. Okay. So I'm going to touch on some of the issues that we're seeing in the real estate industry. And here are issues that I'm seeing in the real estate industry. So we have a shortage of inventory. That's the first thing. Now, everything that I'm talking about right now is related to buyers, but for all of the sellers, just know that the issues that buyers are having actually are benefiting most sellers. Not all sellers, but most sellers. So the shortage of inventory, if you think about economics, if you have a shortage in supply and a high demand, which we're in the Charlotte market, there are basically 120 plus people moving here per day.
Wow.
So with that shortage of inventory, what happens is when a seller places their home on the market, they're actually going to receive either the actual list price or they're going to receive more than what the house is listed for, if the house is priced correctly. Now, if your house is not priced correctly, it may sit, which is what we're also seeing in this market. So some sellers are pricing their homes like we're still in the pandemic, and we're not. Those homes are sitting for 140 plus days. Everybody who is pricing their property correctly, usually it's on the market for 44 days on average. And at the Carolina Wise Realtors, most of our properties go 4 times faster. We're selling in 11 days. Now, the second thing that we're seeing is rates and the home values increasing, okay? So rates increasing, that's hurting the buyers because a lot of them, they can't afford as much home as they used to be able to afford when the rates were down. Now, the property values increasing, that's actually hurting the buyers as well. Although there are 120 plus people moving to the city, there are also a lot of people being priced out of the city when it comes time for them to buy a home. Now, for sellers, with the home values increasing, that's benefiting you, okay? But unless that buyer has adequate income, or they're coming from another state, let's say Texas, New York, Florida, California, one of these major states where their home values are well above the Charlotte market, and they're coming with cash, it's going to be tough for a buyer to come and purchase a property in the Charlotte market who lives in the state of North Carolina. If you make a substantial amount of money, this does not apply to you. I'm speaking to the people who make the average income, all right? Last but not least, this is something that has impacted our market in a major way. As of August 1st, NAR, the National Association of Realtors, they have new rules and regulations in place where the buyers, they have to, before a lot of agents were hopping in the car with buyers and they weren't getting buyer agency agreement signed. Now you have to have a buyer agency agreement, and you also have to have a compensation of agency form filled out. And that compensation of agency form is something that I've been using for over 20 years. And what it is basically doing is asking the seller, what are you willing to pay me if I bring you a buyer? Years before, the seller was the one who was required to pay the realtor their fee. What they were doing was paying a brokerage their fee. The listing agent would write the dollar amount or the percentage in that that seller was going to give their brokerage. That's how it was supposed to be said to the seller. Unfortunately, there were some realtors who were saying, hey, you have to pay my company and you have to pay the buyer agent. That is not what was happening, okay? And unfortunately, because there were agents out there doing that, there was a lawsuit. I'm sure many of you have heard about that lawsuit. And the public won in the lawsuit. So now the seller doesn't have to disclose what they're willing to pay the buyer agent in the MLS anymore. It is wiped out. We can't see that. So now, as a buyer agent, your agent may ask you as a buyer, are you willing to pay me this percentage if the seller isn't willing to give it to me? Now, you can say yes to that. You can say no to that. That's up to you as a buyer. But Will and I were talking about this earlier, and we were saying, as realtors and as mortgage lenders, it is our duty to educate the public. So that is why I'm speaking on this right now. And a lot of agents are getting out of the industry as far as the real estate industry because many of them are afraid to ask their buyer, are they willing to compensate them? And what I was telling William earlier is it's all about education and explaining things. So as your agent, I'm going to request this fee from the seller. Okay. So my fee, I tell you what it is, and then I'll tell you what I'm sending over to the seller or the listing agent. They're going to relay this message to the seller. The seller is going to say yes or no to this fee. All right. Once that seller says yes or no, they're either going to send that document back with what they are willing to give me. And then if I'm okay with that, I'm not going to ask my buyer to pay me anything. All right. Now, here's the key to what I'm speaking on. As a buyer agent, I want you to know, as a realtor and as your buyer agent, there are documents that you need to sign, and there's a due diligence process that you need to go through. There are vendors, contractors, people you need to speak to. Okay? There are attorneys that you will need to speak to. I'm here to guide you to the finish line in your dream of having home ownership. So I'm never going to ask you to pay me anything more than what I think is feasible, okay, for you to give me. If I know you're having issues getting to the closing table, William just mentioned, hey, closing costs is a big issue right now in their industry. If I know you're having problems with getting to the finish line with closing costs, and the seller says, hey, I'm willing to give you 1.5%, guess what I'm going to take? 1.5%. All right. So just keep that in mind. All right. But on the flip side, if I'm showing $1 million property to someone and I know that they're coming to the table with cash on hand and the seller's willing to give me 1%, I think it's well within my right to ask you to give me another 1% minimum. Okay. So just keep that in mind. That's just something that's going on in the industry, and we want all of you to know this up front. I don't want you to go out there and sign a document with someone thinking, everything is still the same as it used to be, because there are rules that are in place as new rules and regulations as of August 1st, 2024. We just want to thank you guys for tuning in today. And again, like we mentioned before, if you have any questions, please drop it in the comments so everyone out there can see the question and we can reply to it and give you feedback. And if you guys need to reach out to us by phone, text, or email, I'm going to allow William to tell you his phone number, and then I'm going to give you my contact information, okay?
So I can be reached at 704-299-4420. You can also email me at william.hughes, that's HUGHES, at midamerica.mortgage.com.
All right. I can be reached at 980-258-9595. That's 980-258-9595. And if you want to reach me by email, I can be reached at soldbyray@carolinawiserealtors.com. That's soldbyray@carolinawiserealtors.com. Thanks for tuning in, and we'll see you on the next video.